Tax math might be some of the hardest math because it just ignores all logic and reason at times. The most recent example of this coming up was as I was talking to a new taxpayer that RTS will be working with this year who had installed some solar panels and was having a little bit of trepidation about how the solar tax credits were going to play out in reality. The sales pitch they'd been given was, hey, buy these solar panels, here's what the total bill is going to be, but don't worry, here's the credit you're going to get. We'll just call it $20,000. Now, the salesperson had done the right math based on how much the solar panels cost of what the credit would be, but where the gap was that the way it was explained to the taxpayer is, oh, hey, the IRS is going to send you this check for $20,000, and that's not the way it always works. Because the IRS on your tax return is going to look at all of your income sources, all of your different sources of tax calculations, and then we can use credits to offset some of that, and they're only going to refund the difference or ask for a payment of the difference. Now, thankfully, this taxpayer had kind of tipped them off a little bit to, hey, this isn't quite making total sense. I want to make sure we don't get burned at tax time. And part of the reason they felt that way is their last CPA had made some kind of vague statements about, oh, well, it's not a refundable credit, so you may not get it. The other comment they had made was, well, because of one of the taxpayers' work withholdings, they might not get it. And that was the extent of the conversation. And while there's some elements of truth in there, it was missing the big picture because the taxpayer walked away from that conversation thinking, well, wait a second, how do my W-2 wages affect whether or not I'm going to get this solar tax credit? And it's because the IRS lumps everything together. Because a person can easily walk away from this solar panel installation and think, great, my $20,000 check is in the mail, we're all set. And then they get to tax time expecting this $20,000 check, only to find out, hold on a second, the IRS is going to apply it in other areas first. Especially for taxpayers who are spending tens of thousands of dollars on solar panels. Not surprisingly, they're in an income bracket where withholdings by default aren't always going to catch up or aren't always going to keep us covered, especially when we have things like incentive compensation or equity-based compensation. We're into a lot of situations where the default is withholding 22% and we have this gap. So if I'm in this situation, I'm a married taxpayer, we make good money, we're making a few $100,000 of taxable income a year, and again, I'm expecting this $20,000 check, but what I didn't realize throughout the year is that my employer was under withholding because I didn't know to tell them any different. The W-4 that we all fill out to communicate how much we'd like withheld, it isn't super clear on what the final outcome's gonna be. And so for this taxpayer, they're headed straight towards from their employment, they're actually going to have a big tax bill due. And rather than the IRS send them a $20,000 check and then ask for more back, they're just going to net the two together. And so anytime we're pursuing a tax planning strategy that results in tax credits, in tax savings, that someone has pitched to us as, hey, you're going to get a refund, we got to remember that there's got to be a big asterisk next to that you're going to get a refund. Because it depends on the rest of your situation. Depends on how well you've done paying your other income taxes that are going to be due. We've got to look at the year in totality before we get our hopes up too much about what the specific outcome in April is going to be. Which is a huge advantage to having a tax professional in your life, whether that's a financial advisor, a CPA, an enrolled agent, who can talk through these things with you so that we don't get our hopes up and only to have them dashed against the rocks. What was news to me in this situation, hopefully no one else has come across, but I wouldn't be too surprised, is that the way this solar credit installation was set up was that they essentially financed the project. It was a very large project. And the terms of the agreement were specific to, hey, when you get that refund, that's going to come to us at that time, or the terms of the agreement change. And so if these taxpayers hadn't taken the time to say, hey, Stephen, help me understand how this is actually going to play out, they could have gotten to April needing to pay $20,000 to this solar company, only to find out not only are they not getting $20,000 from the IRS, they might actually owe more to the IRS. At the end of the day, they're going to be $20,000 ahead just because that $20,000 offsets other monies they might have had to pay in. But that the order of operations, that timing of cash flow, can really affect the overall outcome of the situation, especially how we feel about the situation if we're getting nasty surprises along the way. So we got to make sure that we're looking at the year in total. We got to make sure we're looking at all of our income sources, all of our tax sources, and understanding how those things offset before we get our heart too set on what the outcome when we file our tax return is going to be. So happy tax planning.